Hi, I'm Kerry. I'm the host of Best of Us Investors. We're a tribe of like-minded investors who want to make good financial decisions, and it seems to be getting more and more difficult. We hold a tribe meeting once a week, and at one of our last tribe meetings, I was talking about the threats of China and inflation and exorbitant prices on stocks, and I felt that there was going to be a market correction, and Nick stepped up. Nick is a lawyer out of Boston that advises us on some of the other issues that we're dealing with, like NetList. And he said, Kerry, I think you're missing the big threat to the market, the big threat to the volatility of the market in the coming months. And I said, what's that? And he says, I think it's the statutory debt limit that was addressed in late September or early August, when they raised the debt ceiling to 28.4 trillion and said it could not go beyond that without some extraordinary measures. Well, if you'll look at the debt clock, you'll see that in fact they have already exceeded that. So apparently the extraordinary measures are in place, because it's up to 28.89 trillion, right on the verge to going to 28.9 trillion. And then their options kind of run out. Their extraordinary measures effective roughly November the 1st or shortly thereafter. So I thought it was important in this video to address this situation and say what has happened in the past that can give us some guidance as to what might happen in the future. And is Janet Yellen right when she said that this could be a widespread economic catastrophe and create a financial crisis if it isn't addressed and addressed properly very swiftly? And then, as I say, what has history told us, and what are the expenditures that they are facing, and what should we do as investors about it? That's kind of the way that I like to run this channel, is that it's not all about me. Nick has a voice. Nick expressed the voice. I'm digging into it, and now I'm going to share my insights that I've come up with, and maybe you can benefit from it. And maybe even better than that, you can join our tribe, and you, like Nick, can express your concerns and your issues, and collectively maybe we can come to a decision as to what we think is going to happen. So that's what this video is about. That's what this channel's about. But I'm not your financial advisor, so let's get that out of the way, and then let's face this this treasury issue that we're facing.
Best of Us Investors presents Kerry Griegmeyer.
Okay, to give you some history, back in 1939, Congress passed the debt limit or debt ceiling bill. Since that, it has actually raised the debt limit 98 times since World War II. And for the most part, it's just a normal procedure, and things go through. But it has gotten a little bit squirrely. It started really in 2011, then again in 2013, 2017, 2018, and 2019, where our Congress, our Senate, our legislature, and our executive branches has used this as a political hammer to beat up on each other, usually to beat up on the controlling party, to show the public that they don't have control of the situation. And I think my real issue is that the tremendous divide that is within our country could push this to the limit where they actually create some major problem. So where is the problem? As I see it, that the government, as I showed you, has surpassed the 28.4, and we're up to almost 28.9 trillion, and we're exhausting the extraordinary measures that Congress is able to make. So what I see on the forefront is very close coming, that so they have to make a $22 billion payment to Social Security on the third day of the month. Well, obviously they've gotten through the third day of October, but the third day of November they got to write a check for $22 billion that they don't have. Then on the third Wednesday of the month they got to write another $20 billion check for SSI. On the first day of the month, they got to write a $35 billion check to Medicare, and then also on the first day of November, they've got to write a $25 billion check to the military to pay the military and civil service. And also on the first of the month, their interest is due on their debt. So that means, and I guess I would ask you to think about it, is in your household, if you had reached the limit that the bank would lend you, but yet you can't get them to lend you any more, but you have these 22 billion, 20 billion, 35 billion, and $25 billion checks that you've got to write within a 3-day period of November the 1st. I would say you're kind of up the creek without a paddle. But as I say, Congress has done this before, and they've always kind of brought the whole thing into focus and wrote the checks and then cranked up the printing press and just started printing more money. But nonetheless, I want to look back and say, did it ever really create an issue? And it did in 2011. And I want you to look at this chart here, and you're going to see that when they reached that tipping point in July of 2011, and the Congress waited till the last minute, which it looks like they're going to do here, the market dropped 27% out of fear. Well, now what is the fear? Well, there are some consequences of not paying your bills. Number one, the default will create a drive up in interest rates, and that affects the rates that people and companies can borrow money. Second, it causes investors to lose confidence in the dollar, which creates inflation. Also, then, history shows us from 2011, there is a stock sell-off because of, again, high valuations of stocks relative to a depreciating dollar. You have lower consumer spending, and then you have margin calls. All these things lead to panic in the stock market, and in 2011 created a drop of roughly 27% in a matter of a week. So I am then saying, okay, this is something that I need to be prepared for, possibly as I have roughly $250,000 in cash, I will be in a position to buy into this potential drop. On a longer scope, though, and I think this is something we have to think about, is the respect of our nation for our ability to run our financial affairs. And I have talked in the past that this is just the kind of thing that China wants to feed off of, because they want to show that the United States is probably not the currency that the world wants to depend on in the first, because they can't manage their affairs. So I think we have some, and I think we need to recognize this is all being caused because of the overwhelming divide of the political positions, not only in Washington, D.C., but across the United States, that some people are willing to put things in the balance. So 2011 gives us something of a path of what could happen. Do I think it's going to happen? No, I don't, but it could. And so as a prudent investor, I need to be ready for it. So what do you do today as an investor? I think you put your ear to the ground and you pay close attention as to what they are doing about this. Right now, I'm not hearing a lot of conversation about it. It just seems to be something they have pushed to a back burner, and that's what scares me. Again, if we look at 2011, that's what they did then, is they just basically said, we have other issues we want to focus on. We want to undermine each other in political parties, and we'll let this go to the last minute. And I want to, again, one of the smartest people I think up there in Washington is Janet Yellen. And she has basically been quoted as saying, this could be widespread economic catastrophe and create a financial crisis. So as an investor, you need to be aware of that. You need to also put into perspective that we have a broken supply chain and we're going to have a shortage of goods, which is going to create a potential raise in on interest rates. We're already seeing the 10-year Treasury break that 1.5. I think this morning it went up to 1.6, and that is creating a potential of inflation, higher interest rates, and you add this to it, the demise or the unwillingness of our Congress to come together and settle this problem, and you have a perfect storm brewing. So this could create an opportunity. I think my statement to you is recognize that volatility is potentially on the horizon, and then you make a decision. Are you going to ride it out and have confidence that it will take care of itself? Or do you believe this is going to add to the inflation, the higher interest rates, the lack of goods and services, and then make a decision, okay, we now know the problem, what is the correction? Again, this is an event, and I constantly mention that the stock market reacts to events. This is an event. It's a short-term event. We've got roughly 15, 16 days until this will either be settled or it will explode. But you need to be aware of it. So that's my role at this point. Point out some things that might help you make some good investment decisions. I'll talk to you again tomorrow.